We are in the beginning stages of one of the largest wealth shifts in history. It's being called the Great Wealth Transfer, and a growing share of that wealth is being generated by women business owners. Whether you're leading a company now or preparing for the day that you'll sell, the decisions you make before that transition can determine not only your financial future, but also your legacy. Welcome to another episode of the Simply Retirement Podcast, where we want to empower and educate women to live your retirement on your terms. I'm your host, Eric Blake, practicing retirement planner with over 25 years of experience, founder of Blake Wealth Management, and I would not be the man I am today without the women in my life. We've talked about the great wealth transfer in the past, and we're seeing more women than ever, not just inheriting wealth, but actually creating it, often through the building and selling of successful businesses. And the wealth from those ventures doesn't just disappear when the business changes hands, it becomes the fuel for the next chapter of life. For some women, that means a well earned retirement. For others, that might be the launch pad of a new venture, more time for family, or focus on philanthropy. That's why today's conversation is so important. And joining me today will be Renita Wolf, founder and CEO of Poe Wolf Partners, a boutique exit planning advisory firm that helps middle market business owners prepare for and navigate business exits, aligning financial outcomes with personal and legacy goals. We hope you walk away with actionable strategies to feel confident, strategic, and supported when it comes to planning your own business exit. Renita Wolf, welcome to the Simply Retirement Podcast.
Thank you, Eric. I'm excited to be here and I'm looking forward to our conversation.
So, Renita, can you start by just telling us a little bit about your background and what led you to start Poe Wolf Partners?
I had a successful corporate career for over 30 years, and in those roles, I was a senior finance manager for Fortune 50 companies and then also a chief financial officer for a smaller company. And one of the things that I did in my work there was mergers and acquisitions work. And I wanted to continue working, but I wanted to do something different than corporate. And I wanted to have a bigger impact. And based on what I'd learned at corporate about mergers and acquisitions, where we would acquire smaller companies to consolidate them into a large organization, is that many times the founders were not pleased with the transaction once it was complete. And because of my experience with transactions and the technical side of it, I understand that part of it as well. So I wanted to bring that to business owners and help them exit their businesses, be prepared when that time comes for them.
Awesome. Now, one of the things I've always been fascinated by, and one of the things we focus this podcast on is, the emotional preparation of retirement. It may be even more important than the financial preparation. And I can't imagine that selling a business is not very much along those same lines. Can you talk about the emotions that come with selling a business or preparing to sell your business, or thinking about the stress of what life might look like after that, and how those two compare? How does the emotions of retirement and the emotions of selling a business, how do those compare?
Won't really compare them because I think they're many of the same things, as I said, as I left my corporate career. But Eric, what I would say is that many times people are unprepared because they never think about it and they don't know what to expect and what to do next, particularly when they're looking at eventually exiting their businesses. So they are totally unprepared, and that's unfortunate. So I help them get ready.
Very much alike then. Yeah, completely understand. So I know one of the other things is, and this is something you actually stressed before we started our conversation today, was thinking about, a lot of people may think my financial advisor, they handle my money, but how important do you think it is for somebody like yourself, a professional like yourself, who's helping people navigate that exit, that business exit, and having their financial planner, and you working together, or at least being in communication when they're going through this process?
Yes. Well, when I talk to business owners, um, it's very common for them to have accumulated some wealth. So they do have a wealth and financial advisor, which is very good practice. And the financial advisor who's, in most situations, placed an estimated value of what that business might be worth if the owner were to exit the company. So when you look at a total roll up of the net worth or the value that an owner would have, it includes an estimate of the value of their business. The surprising part for business owners, and this is a statistic that's commonly out there in the marketplace, is more than 80% of businesses never sell. And then most owners who do have a business, that value that's reflected on the balance sheet that their personal balance sheet that they have with their financial advisor has never been validated. So they may think it's worth more or less than what it really is. So they may think they're prepared for retirement when in fact they are not. That's something I ask them about. And that's one of the first things when I start working with new clients of what we talk about. I would say that's the second thing. There's a first thing that comes before that. And this is another surprising area. It's because of the background that I have and realizing it's a really big world out there and there's lots of opportunities for business owners, is that I ask them ideally not about themselves, but who would they want to buy their company? Most people never think of that. They think, oh, I want the most money and I want to get out the quickest that I can. However, as it goes along to the transaction where they eventually begin to sell, I see some owners who back out of the transaction because they don't like the buyer. They don't like the package that or the earnout, if there is one in place, that they may have to stay on after a while. So there's a lot of surprises that it's not as straightforward as what people might think.
Well, so I think that's a good next question would be, and thinks about, when you think about exit planning and what you do, how is that different than traditional financial planning? What goes into it? I guess would be what I would be curious about.
Okay, so how an exit planner works with a business owner is in the way that I work. So people who are looking at a financial advisor is part of the team that supports the business owner. So when someone's looking at exiting from their company, you get to the point where it becomes a transaction. Somebody's wanting to buy it. And as I said, once you have your ideal buyer in place, who is that person? But the financial advisor is part of the team that would work with the business owners. Other members of the team include their CPA, their attorney, and then also if there's a broker, if it's a smaller company, or investment banker, if it's a larger company. So, for example, something that's over $10 million. So there's a team of people. And how I work different than that, and most of those people are totally focused on the transaction. I work with business owners before they get to the point where they take their business to market. I can give them, as I said, the first thing is who ideally and would they want their company to be sold to. And then I talk to them, what would they like their life to look like after they sell their business? And then we get into doing a preliminary valuation to just see what it's worth, see if it is that same close to that number that they have on their personal balance sheet. As I mentioned earlier, is that money that they could potentially retire on once they leave their company. And then because I worked and then I have the tactical experience of helping them get some things cleaned up before they take their company to market. And it's more than window dressing. It's actually making sure. So some examples, there's a lot more to it, but are their financial statements compliant with generally accepted accounting principles? For example, in smaller businesses, it's not uncommon to see someone who's maybe worked with their CPA and their tax expert to minimize their taxes. And what that means is they've ran expenses through their personal income statement to reduce reported income. And that's correct. That's what they should do if that's their motivation. But that's a different perspective than if they were to sell their business because they need to report that what potentially a buyer would be able to realize if they came into the company. So the profit would have been higher if they had not taken all of those tax deductions. Like I said, they're legitimate, but it's just a different frame of mind of looking at your financial statements. That's one example.
Because I guess you'd have to think about it, if you're going to convince somebody else to buy your business, then you got to make sure they know what they're buying, I would guess would be a big part of it. And I think one of the things you talk about is how it's important to start early. So if you
Yes.
do have some to clean up, some of those types of things, can you talk about the benefits of beginning this exit planning well before you might actually think about wanting to sell?
As I mentioned earlier, the cleaning up the financial statements, making sure they're GAAP compliant, maybe going back and restating some of those financial statements. They're correct, but they aren't focused only on reducing taxes. So that's one thing. The other is most people who buy a business want to be able to take it over directly and not have the owner involved. They don't, if it's dependent upon the owner to be successful, it would be less attractive to potential buyers. So, what has the owner done to transition themselves out of the day to day operations of the company and have somebody in place? So, for example, if a new buyer came in, they would already have maybe a chief operating officer or even a CEO if it was a larger acquisition that somebody would be buying. So, the owner doesn't stay on with the company once it's been sold. Those are some examples. And then the other cleanup is digging deep into contracts, making sure those would be transferable to a potential buyer is an example. And then also making sure they put in places to motivate team members to stay. So they want their employees to stay with the business. If they're looking at a buyer who would keep it running as is, independent of they're not doing a consolidation or a roll up, and making sure that business can continue to function, that all the employees don't leave once the owner leaves the company. So those are some examples. And you can see, Eric, those kind of things take time to get in place and they're doable. And we mentioned it earlier, the emotional part of exiting a business. This is where it comes down to the owner not being able to let go of those things and can really cause some problems when they're
I
looking
don't know anything about that. I don't know what you're talking about.
when they're looking at selling their business. I know in my I've seen people who think that no one can take care of their customers as well as they can. No one uh, knows their vendors as well as they do, or maybe their vendors would not want to work with a new owner. So making sure they have those things ready to go and have prepared. And like I said, that's the tactical side. I would say that's the relatively easy side. It's the getting to that point that is the most challenging for most business owners. And learning these things is a bit surprising for them as they go along. And how I work with owners is I come in and work for the owner. I don't get a commission on the transaction. Brokers typically would get a commission, for example, and CPAs have their hourly rates and attorneys do, but they're only looking at their siloed areas of responsibility. So I look at the total picture and I can do that because I do have that background doing transactions and working as a senior executive in larger companies. So I come in and really am a confidant to the owner of the business. I know recently I was working with an owner and he asked, I don't know what I'm going to do. He had a private company come and was interested in buying his company, and he got an investment banker involved, but he really wasn't ready to go. So once they got down to the transaction, the deal fell through because he had not prepared his business or himself. And so it was the tactical things we talked about, but it's also the emotional part because when you go to the table to talk with these people, they're totally focused on the transaction. They do this type of work almost every day and they start talking using words that maybe the owner's not familiar with. They start talking about the business and an objective perspective, which may be disrespectful at times to the owner, or they feel that it's disrespectful. It's not intended to be disrespectful, but these professionals are looking at it as a transaction, and it's something that maybe an owner has spent decades building up and working at it, and working with people like that can be challenging. So I can help the owner and be on their side, be their confidant, and let them know first what to expect, help them to prepare, and then, as I mentioned earlier, evaluating if they're ready and if they're not, what might be the priorities of where they focus their time.
Well, I think it's interesting that you brought that up in terms of thinking about time. We did an episode a few weeks ago on the 1,000 hours of retirement. And it was basically saying, okay, if somebody's, they've been working for the last 30 years and they retire, they really got to come up with about 4 hours a day of what they're going to do. But that's not necessarily the case with business owners. When you think about business owners, you might be thinking, you got to come up with 8 or 12 hours a day to fill my time because that's where I spend my life is in this business, growing it and caring about it and all that kind of thing. So I'd love to get your thoughts on how important is preparing for the time management aspect of leaving a business and what is it going to look like on the other side of this?
we all have different things that we enjoy doing and like doing. So that's an individual question. But I know this one owner was, I was taken aback a little bit because we were in the middle of a negotiation and like felt comfortable with me, knew that I would keep the conversation confidential, but it was like, I don't know what I'm going to do when this is over. And me, I wasn't trying to solve his problem, but I started listing some things like doing some things that you've been wanting to do and you've been putting off in your personal life. Maybe there's some hobbies you wanted to take up. Maybe there's some you want to move or do some travel. I don't recommend any major life changes for a year after someone leaves their business, but maybe there's some travel they want to do, or maybe they want to spend more time with their family, for example. But the thing that touched him and the light bulb went on, I said, and another thing you could do is take some of the money that you realized from the sale of your business and invest it in other companies where you could serve as an advisor or on their board of directors, but not have to be involved in the day-to-day business. And his face just lit up when he saw that, and he could see like the other side of what this might look like for his life.
That's awesome. Well, and I think that's one of the things in terms of thinking about mistakes and what that looks like. What are you, just from your perspective, what are some of the bigger mistakes that you see when people are preparing for an exit like this?
First of all, is not even thinking about it or preparing ahead of time. And I know many of your listeners are women, and there's women business owners, and I wanted to talk about spouses. So this would
Please, yes.
apply equally to a male or female. So it's not spouse or gender specific, but the spouse, the person talks to every day is in many cases the one who's pushing the spouse who runs the business. And so in this situation, I'll use the husband's running the business, the spouse or the children are pushing their husband and their father to exit the business because maybe, and many of these owners are in their 60s. Our health starts failing as we get older, and there's just no way out of the business if they don't start thinking about it ahead of time. And this is where those family members can help the person who runs the business every day prepare for that eventual exit. And it can start with a simple question as to what would you like to be doing in 5 years, just to get them thinking. So that's a first question. And then when they're ready to really start buckle down and start planning and be able to kind of take their ego, take their day-to-day involvement in the business out and start focusing on getting it ready. So we've been talking academic and not academic, but transactional business things. But what's so important, and this is where it can really hurt families if they're not prepared, because things do happen that are not expected. And so if there's been one spouse running the business, supporting the family, and no matter the age of that individual, because this can happen at any time, is there's bad health, there's a situation that comes up and they're no longer able to run the business. But if they've not prepared the company and prepared their family, the family could lose that income. They could also lose that value that the owner has spent most of their life building up because they haven't thought ahead. And I've seen that happen. I worked for a company that was the founder was killed in an automobile accident. I was the CFO. That was one of the small tech companies that I worked for when that happened. So, and then we also know that illness can happen unexpectedly. So this can really leave a family vulnerable if they haven't prepared ahead of time. So it's a conversation. And to that point, I will add, even if somebody says, I never want to retire. I love what I'm doing and I always want to be here. They should still be prepared if that were to happen. Then also what I found is owners run their businesses better if they have all of that tactical stuff, like they have as a qualified staff, they have all their books in order, they have their contracts in order. they have themselves so that they can take a vacation. They can leave for, you know, a month and not have to worry about the business. So they don't have to leave, but just being know that they would be prepared provides a peace of mind. It's kind of like having a life insurance policy in place.
I'm glad you brought that up because that's one of the things. It's been several different episodes that I've brought this stat up, but the average age of a widow in the United States is 59 and a half. And actually, we know that a lot of those are going to be, many of those are going to be business owners where all of a sudden you found yourself where the owner of the business has passed away. And now either you've got the widow that has inherited the business or now is going to be in charge and they've got to figure out what they're going to do. But that's where I think the importance of, back, not to my own horn as a financial advisor, but that's where I think that's financial advisors should play a very important role in that process of evaluating life insurance and buy sell agreements and whether that's in conjunction with some of the work that you're doing or their attorney, their CPA. And it's why it's so important to have a team around you.
You're exactly right, and I agree. Yes.
So getting away from the negative stuff, and from your perspective, and you think about just beyond the sale price and what that money, that dollar value is going to be, what do you feel like is the definition of a successful exit? What does that look like when you factor in things like legacy and values and what that post exit life might look like?
I say it's the being in a position to do what you want, when you want, and with who you want. So that's why I even started my own company, like I said, after my corporate career. And that's all an individual choice. So I think business owners and their families being prepared and being able to do that's success in my mind, not being stressed out about a job or running a business or worrying that maybe they're not ready for that eventual day when they will no longer want to be involved in day-to-day operations.
Well, and I think that's one of the things that I think is important. You think so many people, whether this is selling a business or retirement, or they put things off because they're afraid to talk about it. There's some level of uncertainty. They're just too busy, which is obviously always a lot of time that's a business owner excuse. Is I'm just too busy to look at that, to think about that. How do you help people move past that?
The first big hurdle is for them to ask the question, am I prepared? And then second, how can I get prepared? And letting them know that it's going to take a while. So I come in, do that assessment, do that preliminary evaluation, make recommendations after I do an evaluation of some of those value areas that we talked about, making a plan of how to improve them. And then if they want help to implement some of those things or some oversight to help keep them on track and have an accountability person along the way, I come in and kind of act as a personal board of directors for them to push on the agenda to get the business ready. So that's how I work with them. And then if there's an area that needs a little bit more work that's beyond my area of expertise, bringing in that expert. So for example, what I'm talking about is maybe they've looked at their sales distribution and their channels for distributing their products and realized that maybe they have some gaps. And so they find somebody in that channel who has experience with that channel to come in, do an assessment and help them penetrate into that part of the distribution that maybe they're missing and have some opportunity to grow their business.
Awesome. Well, just a couple more questions before we wrap up. So if somebody's out there saying, okay, this sounds like me, this sounds like I might be ready to move forward. I might be ready to reach out to somebody with what you just covered. Is that kind of the first step or is there, okay, here's the first step or two that somebody should take if they're really thinking, okay, I need to move forward with thinking about this now?
The first step is have the conversation, then start thinking about it. I know one of the things I created was a exit ready assessment,
Hmm.
and it's free and it takes less than 5 minutes, but it looks at the 5 areas of value that I focus on when I work with owners, and it asks some questions, and they're just yes no questions, and you real quick get a scorecard as to are you doing really well in a particular area, or is there a area you need to do some more work. So it's getting that snapshot, Eric, of where am I at really? Is it where I think I am? And then the other thing was get that valuation, get a preliminary valuation of their business because that changes. It depends on current interest rates, what's going on in the marketplace, what's going on if it's a smaller business in their region, because regions have different economic experiences. areas are growing and others are shrinking, for example. So just making sure they have good data to start with.
Perfect. And I want to make sure that everybody knows how to connect with you. But before we get to that, are there any? I know there's actually a couple of great books I've read recently. Of course, I didn't prepare enough to write those down ahead of time. But from your perspective, any books, resources out there where my people could say, well, let me just get my head around this. Maybe I can read a book. Maybe I can find a podcast, just a kind of starting point, just to start dipping their feet into the waters.
Yeah, there's actually a lot of good books out there. So for exit planning, you can just go on Amazon and look for exit planning book. And those are all pretty good. It gets you in the frame of mind of the types of things to expect. And the value of doing that, Eric, is don't focus only on the transaction. When I talk to people, and even in corporate, the first thing that would happen when we would be looking at an acquisition target would be, what's the multiple? How much is my business worth? What could I get for it? And that is not the place to start. And I say that because, first of all, income has to, your income statements have to be what I call normalized, or like I said it earlier, make sure they're in compliance with GAAP and there's no exceptional items in there, for example. And so you can't just take your current income statement and say, this is my earnings before income and EBITDA, amortization of certain assets. EBITDA looks at the cash flow, which is what buyers are looking at and most care about. But you can't just look at that number. And so you need to have a bigger perspective on it.
Perfect. Well, so the next thing, then, how can listeners connect with you, learn more about your work? I know you mentioned the free resource and you'd shared that link, and we'll make sure we include that as well. But how can people reach out to you?
They can find me on LinkedIn, so they can just look there. But then also, I have my website, and I do love to talk to business owners, and I offer a 30-minute free call. And it's not a sales call coming out of corporate. I am not a salesperson. So I really love to hear about people's business. And for 30 minutes, we can talk about it and I could offer some insight. But I'm real happy to talk to people, even if they're not ready now, to maybe point them in a direction so they can start thinking about it.
Perfect. What is your website?
It's polewolfpartners.com.
Perfect. And again, you share that free resource, so we'll make sure we include the link to your website and to that free resource and to your LinkedIn profile in the episode summary. We'll include all that information. Renita, thank you so much for joining me today. This has been an excellent conversation, um, and a lot of great information. Hopefully, somebody can take some value from this.
Well, thank you, Eric. I've enjoyed talking with you. So it's nice to see you today.
And as always, thank you to our audience for tuning in as well. If you are a business owner, remember, a successful exit doesn't happen by accident. It does take some planning, takes the right team, a clear vision for what's going to be next. So I definitely encourage you to reach out to Renita, find her free resource, go through that questionnaire and see what direction it takes you. That is it for today's episode. For all the links and resources, again, you can visit the simplyretirementpodcast.com. Lastly, as always, until next time, please remember, retirement is not the end of the road. It is the start of a new journey.
That's it for today's episode of the Simply Retirement Podcast. We hope you found our insights and advice helpful in planning for a fulfilling retirement. Don't forget to take action on what you've learned today. Visit our website at blakewealthmanagement.com to learn more about our firm and review our Simply Retirement Roadmap process to get you on the right path to the retirement you deserve. And don't forget to click the follow button to be notified when new episodes become available. Thank you for joining us on this journey, and we look forward to helping you achieve your retirement goals. Remember, retirement is not the end of the road. It is the start of a new journey. So embrace it and make the most of it. Until next time, take care. Content here is for illustrative purposes and general information only. It is not legal, tax, or individualized financial advice, nor is it a recommendation to buy, sell, or hold any specific security, or engage in any specific trading strategy. Results will vary. Past performance is no indication of future results or success. Market conditions change continuously. This commentary reflects the personal opinions, viewpoints, and analyses of Blake Wealth Management. It does not necessarily represent those of RFG Advisory, their clients, or their employees. This commentary should not be regarded as a description of advisory services provided by Blake Wealth Management or RFG Advisory, or performance returns of any client. The views reflected in the commentary are subject to change at any time without notice. Advisory services offered by investment advisory representatives of RFG Advisory, a registered investment advisor, Blake Wealth Management, and RFG Advisory are unaffiliated entities. Advisory services are only offered to clients or prospective clients where RFG Advisory and its representatives are properly licensed or exempt from licensure. No advisory services may be rendered by RFG Advisory unless a client agreement is in place.